Hello traders, Gary Wagner here just before 1 o'clock in Honolulu, 6 o'clock in New York. It is Monday, February the 5th, 2018, and this is the Daily Report for Gold and Silver. This is a day equity traders will remember for quite some time, with the Dow Jones Industrial Average at its low dropping over 1,600 points. Gold, though, did manage to trade impressively higher, up about $5.10, closing at $1342.40. Silver, however, was tied to the industrial component of the metal that closed down about a penny on the day. And what we did see in the US dollar was about a 0.5% gain, 89.55. Now, the Dow recovered slightly, closing at 24,345, putting it down about 1175 in terms of points, 4% in terms of percentages. Same with the S&P, losing 113 points, closing at 2648, also a 4% gain. And following suit was the CBOE and the CME's Bitcoin futures, which closed roughly at 7,200, putting it down about 1,300 on the day. Traders, without question, we have witnessed one of the most wild gyrations in U.S. equities and equities as a whole in quite some time, with the Dow Jones Industrial Average and the Standard & Poor's both falling over 4% on the day. In fact, at its low, the Dow was trading down by about 1,600 points. But first to gold. Gold did close higher on the day, currently trading up about $3.90 at $1341.20. It has traded to a low of $1331.60, and the high on the day came in at these tops right at around 44. We've definitely seen, I believe, the worst of the selling in gold that was based upon mass liquidation due to the equities trading under so much pressure. We really saw that on Friday's trading activity when we had the market drop from about 1353 down to a low of 1330 and then recover slightly. Today's move, of course, did open below the close on Friday, but managed to close within the body or range of Friday's trading activity. We currently have a long position. That long position is roughly at 1349. Market's at 1341. We have our stop in place. My recommendation is to maintain our current position and to maintain our current stop. Now, in terms of resistance that we're looking at, we are at a fairly interesting price point that matches up to the 23% retracement at 1341.50. Market is currently trading 1341.30, so just below that particular price point. Effectively, I would like to see it move and begin to trade above this particular price point. That will tell me that the worst, at least on a technical basis, is over, and we should see gold prices begin to move back up to their former highs, again challenging these highs at around 1370. And traders, although silver recovered from the lows it had seen during the morning session, we can see those right in here, it did not recover in the same manner that gold did, actually closing down by about 1.5 cents. It did close above its open, but as you can clearly see, it has closed just at a critical level of resistance at 1670. You can also see that we had a tremendous sell-off on Friday, much more exaggerated than the one that we saw in gold. And so my stance in terms of silver is still a neutral stance, and my recommendation is not to have active long trades in silver, but rather have that equity in gold. And traders, interestingly enough, the dollar has been quite active, moving to higher ground over the last two trading days. So as U.S. equities sold off, the dollar got stronger as interest rates were perceived to be moving higher. We had a moderate move to the upside today in the dollar index, closed up about 0.4%, a gain of 39 points at 89.43. The interesting facet of today's trading activity, especially in the metals, was that gold was able to overcome the headwinds provided by the dollar that limited the upside move. And traders, we are looking at a daily chart of the Dow Jones Industrial Average. Tremendous downside move today as exhibited on this single candlestick, losing over 1,100 points, 1,175 points, closing at 24,345. Traders, if you recall from Friday's show, I had put a price target on the Dow. It was Fibonacci based that said that the Dow would sink to about 24,000. Well, we got the market actually exhibiting that kind of a sell-off and doing it in a single day. I did not expect this move to occur over a single day. The Fibonacci retracement that we had put down on Friday really started from the lows just above 15,000 up until these recent highs, and our first benchmark was the 23% retracement at 24,000. We clearly took that out today and recovered well above that. In fact, the action in today's U.S. equities markets was some of the quickest and most decisive sell-offs I have ever witnessed. And traders, although the market did recover from the lows seen in the morning, and that is this particular low right here as exhibited on a 1-hour candlestick chart, you can see that the market 2 hours in came down, tested these lows, and then during that same hour period moved back up. That's what this tail is, to where it would have opened right in this area and then sold off for the final hour of trading, closing just shy of 24,400. Well, Friday's action certainly wasn't a one-day wonder, but the question is, how long will this selling continue, and will we witness any kind of support in the next few trading days? And traders, finally, a quick look at Bitcoin futures. This is the CBOE single Bitcoin contract under pressure along with the rest of equities and other markets, as there was a flight to cash and a flight of liquidation to cover losses in the equities markets. We are looking at a daily chart of Bitcoin. You can see that a new day has just started in terms of how they post the market, but it did open below the close that occurred just about an hour ago, trading well under 8,000, currently at $7,250 per single Bitcoin. As I spoke about last week, I believe that we could in fact find some support at 7,500. We have slipped below there, so now it's a matter of whether or not Bitcoin futures can find some support between here and call it 6,500. Traders, today we saw the single greatest decline in terms of percentages or points, that the Dow Jones Industrial Average has ever experienced. In terms of drawdowns, it was the 33 worst day in history. So it wasn't in the top 10, but it was certainly a day that people will remember. And gold finally started to follow suit as equity moved back into safe haven assets. I believe that we should see higher pricing in gold. We could see the dollar continue to get stronger, but I'm very, very comfortable with what we're witnessing right now in terms of the precious metals. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.